Let me then quickly introduce everyone. So Yvonne Stillhart, who's based in Switzerland, serves on multiple boards, including UBS Asset Management Switzerland, Integrated Diagnostic Holding, and Patria Private Equity Trust. She's also the chair of the board of EPE Capital, and she serves across Europe and Africa. Eric Mai, who you see on your screen as well, is the Director of Enterprise Risk Management for Delta Airlines. He also has served as the chair and vice chair of multiple boards across the greater Atlanta area here in the United States. And a lot of you know Alex Sidorenko, both as a faculty member in our programs, but also for his leading work in the risk management space, having been recognized as Risk Manager of the Year, and his program Risk Awareness Week, which generally draws thousands of risk managers to it each year, was named, I think, Education Program of the Year by the FERMA Risk Management Association in Europe. All three of them are DCRO exemplars, for people we recognize for their integrity, their innovation, their leadership, and their service. So I'm very pleased to have all of you here. Alex is going to be moderating this. I'm going to disappear off of the screen, and I will look forward to our conversation. If you have questions, please post them in chat, and we'll take care of those after the discussion. Alex, over to you, and I look forward to the conversation. Thank you all.
Thank you, David, and hi, everyone. Lots of familiar faces on the screen. Always a pleasure. We wanted to kick off a series of conversation trying to bridge the gap between the risk managers and the shareholders and the board. And I thought today was such an amazing opportunity because we have Yvonne with a lot of experience sitting on various boards and kind of seeing the conversation, the communication from one side, and then we have Eric sitting on the risk management side and contributing to that conversation from the other side. So I thought today is going to be very interesting, very interactive if you help us. We are thinking of broadcasting at least part of this conversation kind of to the broader risk community. So I think for the sake of just logistics, it would be easier if you can type in your opinions and questions in the chat, and then David will help us monitor that. And then I think when we kind of go into the Q&A part of the session, we'll switch off the recording as DCRO traditionally does, so we can have kind of a more intimate conversation. So I wanted to first kind of set the expectation, set the scene. And Yvonne, if I can turn our attention to you in all of your experience at sitting at different boards, can you share with us what is important for the board members when it comes to risk management? What sort of risk information do the board members want to see to fulfill their duties? What's the top three priority items for the board members when they hear the word risk management?
Okay, yeah, thank you, Alex. From a board perspective, risk management is not just about minimizing threats, or it is about ensuring the organization's growth or resilience. How do we do this? How does a risk report help us in these factors? That means a risk report for a board member should have actionable insights. I see it often that risk reports are full of compliance and mitigation factors. But what I, as a board member, really want to see is, what does that mean for me? What do I mean with that is, for example, strategic risk contexts. How does this specific risk impact my financial performance? How is it impacting my competitive positioning? And where do I see the growth opportunities? I would like to see a timeline and execution risk element. So what happens if we don't deal with a certain issue by date X? Do I have an issue or not? Or I also like to understand what it means in terms of revenue and cost impact. For example, what does a 3 weeks supply chain delay mean for the revenues? What does it mean? Are they staying flat? Can we manage it? These kind of information I would like to see as a board member.
Thank you. Can I turn to you, Eric? And you as the head of ERM and the practicing risk manager, in your wildest dreams, what would you want the board members to ask you for?
Hey, good morning, Alex, or good afternoon for everybody as well. It's a pleasure to be with you. But it's a great question, right? And it's one that's always the kind of hardest to answer. But at the same time, like for me, it's just engagement, right? So it's not just a singular question, but it's that iterative, compounding kind of series of questions from a place of like genuine curiosity. Like, how can I help better inform you as a board member with what I see happening across the enterprise and across the business that allows us to engage in a deeper, kind of more iterative dialogue? So for me, it's really about kind of having that two-way street. It's not, again, just this, let's check the box and, you heard the risk report out. Now we're done, moving on to the next agenda item. It's like, what information can we provide to you that better informs you, right? So because the questions you ask me also inform me on what's top of mind for you and what's important for you. Maybe we need to bring different information to you into the boardroom. Maybe we aren't articulating something very clearly. So, by asking those questions too, it also is an opportunity for engagement for me to take action outside of that boardroom. Go do a series of, analysis or, have a series of questions and, things that we go and do and then bring back to you in the next meeting. So something that's kind of that, engaging and, just kind of action oriented for us is always super important. I think too, Alex, we want to always try to build that trust, the bridge of trust. I think that's the ultimate human currency. So we want to try to have that ongoing trust between us as management and you as the board. And I think, as I think about what Yvonne just kind of touched on, getting to the so what, so management presenting the so what, like, what does this really mean? I also want you guys to kind of ask, like, are we taking enough risk or are we taking too much risk, right? So that starts to get into appetite and tolerance, but where are we really? And can we do more, or are we out over our skis and need to back off?
Thank you, Eric. And I wanted to build on what Yvonne and you said and kind of bring this idea of maturity of the relationship between the risk managers and the board members evolving. I think because this dynamic has been happening for quite a while, there is a certain expectation. For example, the word risk report, both of you have mentioned, that's almost like a staple of risk managers producing something and then the board members are reviewing it and making some sort of judgment based on that. I think we can kind of safely say that's like maturity level number one. That's like the baseline that hopefully most organizations already have or will have in the near future. And Eric, you mentioned something very important about building that kind of relationship and integrating the risk insights into the type of decisions that the board members need to make. So maybe, and I want everybody who's listening to us on the call now, you can chat, you can type in the chat maybe some examples of where that's already happening for you as the risk manager or maybe for you as the board member, because there are plenty of different examples that are happening every day. And I think the second level of maturity that we want to talk about is a situation where risk management stops becoming a kind of a separate agenda item on the board's agenda. You know how at the moment you have the performance, the budgeting, the projects, the investments, major contracts, and then point number 7, you have risk management. And then in that point number 7, the risk manager, the CRO, is trying to kind of convey everything he wants to convey, which is a little bit ironic because the budget decision already is made. All the contracts have already been approved. The investment deals and NPV discussions already happened in the first 3 points in the agenda. And now agenda number 7 is kind of trying to play catch up with the risk. And that's, I think, one of the root causes why the communication between the board and the risk manager are not working as effectively as they could. So I think the second level of maturity, and Yvonne, I'd love to hear your thoughts on that. I think the second level of maturity is having almost like a mini risk disclosure or mini risk assessment for every single agenda item for the board. So if there is a budget being discussed, then what are the worst case scenarios? What is the budget contingency, which is risk-based? What are some of the underlying assumptions that are the most volatile and uncertain? How different scenarios are correlated between the risks? And if an investment is being presented, then NPV can be calculated as a range showing both the upside scenarios and the downside scenarios, and it becomes a trade-off calculation. Do we kind of accept these high risk scenarios because of the returns, or do we need to mitigate the project further? And so then risk becomes kind of part of your every day-to-day conversation rather than a separate agenda item. So Yvonne, what are your thoughts on that?
I couldn't agree with you more, Alex. For me, it should really be on every agenda item that's being discussed. Take an example, investing in AI. We all deal with it these days, but it can be classified as a high regulatory risk. But the link here, which I would expect from risk management, would be also for example, it could bring us another 100 million in revenues if we enter into a new market. That is something where I see the true value of risk management with every agenda item. It goes further. Another topic that is very prevalent for all the industries is cybersecurity. How many times have I heard on the board meeting cybersecurity risk is increasing? Yeah, but what does it mean? What I would like to understand is, how much does a cyber attack cost me? What's a day of outage? What is the effect on my business ability? How much? What do I need to do to build the resilience up there? And the last thing is, and that's also why it's important to link it to every agenda item, is the real-time indicators. Risk management is not what happened in the past quarter. Risk management is also, these are the decisions we take now. What are the scenarios? Where do we go? Which ones are sort of the breakage points or trigger points for items? For example, if we discuss customer churn, if our customer churn exceeds 5% in a quarter, let's discuss again, and let's discuss the new risk and assess the situation. And that is why it's important to have a dynamic risk management. And as you rightly said, that's not done in agenda point 8, where everybody looks at sort of red, green, and amber points. That is, for me, not a very valuable information.
Thanks, Yvonne. So I want to turn it to you, Eric. And if it's one of those situations where if we say A, we have to say B. And if we're saying that in the second level of maturity, we want to see some sort of risk discussions to be integrated into every agenda item, that actually exponentially increases the workload and the competency load for the risk department, because the methodology, the risk methodology that you have to apply to the, for example, large contracts is completely different methodology that you would apply to budget contingency calculation or project contingency calculation. That there are literally different standards that you have to follow. And most of that conversation becomes quite mathematical as well, because if somebody is presenting an NPV or a cash flow number, then the risk presentation shouldn't be this cash flow number has 3 red risks. It should be in the cash flow language as well. What sort of, how will these risks affect the cash flow? So that could have quite a significant impact on both the workload and the competency of the risk team and the composition of the risk team underneath to supply that information. What was your experience?
Yeah, no, it's such an important conversation. And I think, at the root of it, it's behavioral change, right? Many of you and many of the people on the call today, right? We've all been a part of process change and change management. And when you're doing that, right, you're changing a process and rewriting a script or an operating procedure for how something gets done. But you also have to kind of rewrite how people do the work. And that's kind of ultimately what we're talking about, right? We're talking about the how, how does this come together or come to fruition? And behavioral change is really hard, because if you're not a part of that integrated process, if you're not brought to the table to be a part of what are we thinking about? What's this new contract? What's this new territory or this investment in a greenfield plant versus a brownfield plant? Those kinds of things. Don't bring me like you said earlier in the conversation, Alex, don't bring me the deal after it's done and then ask me to put it into a risk toaster and spit out a green light, right? Give us an opportunity to be a part of that discussion, ask questions, and kind of decide and bring analysis to it, right? Like I said, what's this kind of cash flow? What are those kind of NPVs? What does that really mean for the business? And are we still okay with that based on how those models are kind of dictating or kind of driving the information? But I also kind of think that organizations, and I think this is true for a lot of risk managers and risk teams in companies, you've got different types of risk teams, right? You've got those risk teams that are kind of like clearing houses. Many times in financial institutions where like everything gets funneled through them, right? Like they are the last line of defense and kind of the approvers for contracts and decisions, based on value at risk and things like that, delegation of authority. But then you've also got a lot of corporations, like manufacturing or airlines or restaurants and food services that aren't like that, where risk teams are typically tasked with risk identification, right? And then you take that identified risk to a business owner or a risk owner, right? And you're trying to work with them to kind of discern, well, what's the path forward, and are we, where we need to be? And one of the other conversations that David has led through the DCRO and other forums, and you guys have been a part of as well, is board culture. What's the culture of the board for making decisions? Is it a board that's kind of brought in to kind of just like nod and make motions to approve and things go forward, or are there so a little bit more passive, or is it a really active board where you're really asking questions and seeking to understand and kind of driving the strategy and bringing things to fruition? So I think there's kind of a lot of tenets to like, what does this really mean and how does it work? But at the end of the day, it really comes down to like behavioral change. How effective can you be in influencing by the information you bring into that room or into that boardroom for the decision that needs to be made?
That's a very important point that you're making, and it brings so many memories. I'll try. We've
all been there, right? We've had these struggles, and so yeah, it's real. But that's the opportunity for us as well, right? Is to kind of figure out like, how do we meet our board or our management team where they are on that level of maturity, and then it's up to us to kind of figure out like, how do we invest in them? And that's a process, right? We always talk about things being a journey, but you kind of have to nurture and cultivate it over time. You're not going to walk into a meeting and solve anything in a 1-hour meeting typically. If they're at maturity level 0 and you're trying to get them to maturity level 5, right? This is a process that takes time.
I would actually take it even a step further. It needs to be part of the corporate culture. And I'm super thrilled that one of the companies I'm involved with, they have recognized that. They're now putting it out to every level and every department, say risk and where is the opportunity. So for me, I absolutely agree with you, Eric, when it starts on the board level, management, everything, but the whole organization needs to be involved with this kind of positive risk culture, and also try to integrate. Risk management is not the police department that sort of says, oh, you did wrong or you did right. For me, risk department or risk managers, they're also the advisors, and they understand as much of the business as any other person. And for me, this is important that they get brought in very early on.
So
this is, yeah, go ahead.
Sorry.
No, that's okay. I was just going to agree with that, Yvonne, because I think it's very well said.
I was just going to say that with a lot of power comes a lot of responsibility, and if the risk managers, and I love your example about the kind of the gateway in financial services, and they do in a way play a policeman role, because policeman role is actually not negative. There's a big piece of culture and education that police play, but in the real sector, we don't really have that obligation from the regulator to funnel all the information flows through the risk department, and so the risk department really has to chase and convince each of the individual managers that they should discuss the contracts, how the contracts are presented, or how the cash flows are presented, or how the project timelines are estimated. Or simple things like different pricing criteria. Are you taking the average, or are you taking some sort of pessimistic scenario like a P30 percentile? That actually makes a huge difference in negotiations. And the only way most of the time people can get this additional kind of quantitative risk information is from the risk department. But unfortunately, they don't even realize that information exists until the risk manager kind of comes and promotes and sells internally this skill or this competency, risk management as a service. But I think the big point for us to talk about, and I very much love about the conversation about culture, where we're taking this, because traditionally in accounting and finance, all these disciplines are built on the deterministic world. There's an underlying assumption that the world is deterministic. You have a single scenario, you have your best case scenario, your average scenario, and then that becomes the starting point for the conversation. In reality, you have every single assumption being an uncertain distribution, and depending on whether you have too much uncertainty, the distribution is wide, or you have little uncertainty, then the distribution is narrow. But basically, every single decision is a distribution, but it's also a trade-off of distribution. So it's risk versus reward, because sometimes you have multiple options to deliver the same project. You have multiple equipment configurations that can be used at the plant. They just have different risk profile. You have multiple vendors to deliver the same thing. They just have different risk profile. So it's not really just understanding whether something is high risk or not. It's understanding how a risk profile is different from the alternative risk profile. So you can actually compare options between A, B, C that the board should be considering. But that's in terms of, again, maturity. That's not always the case, because usually the management presents a single scenario and saying, please approve that, rather than have a look at the three options, all three of which are good options, but they have different risk exposure and different timing of risk and different nature of risks. And let's talk about what's your board level appetite for taking these risks, and which of the three options kind of resonates more with your existing risk profile. This is what we do at our board meetings. Last time we were presenting 8 different scenarios for a major plant modification. And that, I think, is a huge challenge, and maybe we can kind of start moving into the practical space. Some hints, tips, practical ideas on how to kind of raise that maturity of both the boards and the risk teams to start thinking in scenarios, options, chances of success, and distributions.
I mean, from a board perspective, where I can see a lot of value coming through in terms of growing this maturity, as you describe it, is let's all speak in business terms. Let's use words that mean something, describe the probability, also sensitize the board to probability, uncertainty, and what are the implications of it, and that it's multidimensional. And I think this is also where a lot sort of gets, I call it, stuck in translation, that risk managers come with a lot of numbers and say, this is my risk appetite is X, and we have hit Y and this. But for me as a board member, what does that mean in business terms? How much revenue am I going to lose? How much is the cash flow impact, and all these elements? So I think that would help in terms of sensitizing and bringing also the board along in terms of getting better risk management.
Eric, what are your thoughts?
Yeah, I think what Yvonne said is well said. And again, I think this is maybe where some of my experience might be a little bit different, again, just based on the organization we're in, where the risk-aware culture we have. Because what we'll tell everybody is that everyone at Delta Airlines is a risk manager, right? So everybody's empowered to have certain levels of authority to stop the operation or make decisions that especially around safety and operational performance. But as we kind of think about our roles as leaders and interacting with the board and the management team, yeah, I mean, we're really kind of focused on, again, I'll come back to like meeting our management team and board with where they are on that kind of maturity journey. And so not walking in with a lot of stochastics and stuff like that kind of overwhelm them, but it's more of a narrative, and we call it storytelling. But we partner with our business owners or our risk owners, and we'll share that story and that narrative as a part of the update, whether it's an audit committee meeting or a board meeting, and try to just make sure that we're talking, as Yvonne noted, how to what's the business language, what's the language of the business, so again, just really trying to put it out there as to like, here's what's at risk, and this is what this means for us, and this is what we can accomplish, or what we can accomplish with this investment. But again, we all live in a theory or a world of constraints, right? Where we're constrained on people and we're constrained on capital, right? We don't have unlimited buckets of people to solve problems or unlimited buckets of dollars to solve problems either. So you're going to have opportunity costs, right? You're going to have things that are going to be exposed. I think every CISO would probably want $1 billion of capital budget to solve, IT cyber risk and threats, but that's just not possible, right? You don't have those kinds of pockets and those kinds of dollars to allocate to protect the enterprise. So, and you can't say we have zero appetite or tolerance for IT risk, because that would then mean you're going to dedicate every dollar to solve for that problem. So, I mean, it's a bit of a balance, right? And that's where we talk a little bit about, is this a problem to solve or a tension to manage, right? Because there's this constant management of and friction of, managing the tensions between departments. As you build an operating plan and agenda for a company for a year, the planning department is going to be very aggressive and optimistic, and then the operation teams might say, we can't achieve that with what we have, right? So how do you manage that tension and, from a risk perspective of where we really need to be, and can we continue to go down that path? So that's a little bit of our process, but I don't know if that answers your question, Alex. But
thanks, Eric. And I think before we kind of move over to the second phase and do the Q&A and start taking questions and responding to questions, I think here's one thing to think about. Think of your recent experience as a board member or an executive sitting on the management side. What was the decision that was taken that you wished there was more risk analysis to support it? Please, all the participants, write it in the chat. For Yvonne and Eric, any final thoughts before we move over to the Q&A?
Just to answer your question, I think from my point of view, I wish that there would be a greater level of integration of risk intelligence in the business strategy discussion. I think they go so hand in hand, and I think that is something, that's where it starts, and from there it trickles down.
Yeah, I may just echo your sentiment, because I think, having been a part of a couple of different organizations where we did have that deeply integrated integration between risk and strategy, you can kind of see how that plays out in the manifestation of investments, for big capital investments or mergers and acquisitions, versus not having that really tightly kind of wedded together, which is just, again, opportunity. Because I think for me, they're kind of inextricably linked, right? The relationship between risk and strategy. And I think, again, it's just, if you're trying to be successful and build a business as a going concern, you want to know what you can do, but what you're capable of doing, even if you need to stretch. But you don't want to get so far out of your skis that you jeopardize the integrity of the organization.
Thank you both. David?
Yeah, thank you all. It was a great discussion.